Hello, welcome to Bread FC, the home of profitable traders. And today I'll be diving deep into one thing that I feel is very, very important in the trading space, and that is nothing else but building a consistent trading plan. Right? Most traders don't see the reason why they should have a robot-like mechanical trading plan. What I mean by that is you need to have your set of rules, your plans that help you know what and what not to do in the financial market, right? So you need a mechanical trading plan. By a mechanical trading plan, I mean you need to, number one, define your trading goals. Why are you trading? What is it you need to make from your daily trades? Like, do you have a particular weekly goals? Do you have your daily goals? Do you have your monthly goals? This very account that you're trading, what are your realistic expectations? Once you don't have none of this, you're just going to be hopping and doing a couple of things that are not realistic, and at the end of the day you're going to end up losing your money from your account. So you should have a realistic expectations that, oh, on each particular trade you're looking to earn 3% of your account, or 5% weekly, or 10% monthly. So you need to have a realistic expectation, and by so doing, that is going to help you grow your account faster. Number two, you need to choose your trading style. Your trading style, by that I mean that, do you want to be a scalper? Do you want to be a swing trader? Do you want to be a position trader? Do you want to be a day trader? What exactly do you want to be in this financial market? Choose your trading style, and with your trading style is going to help your tolerance. You won't overly expose yourself to losses in the markets. You won't overly stay too long in the trade you're not supposed to be, because if you're a scalper, you have no business being in the market for more than 2 hours. As a scalper, 1 hour most times you don't have to be so long in the market. And as a day trader, at the end of the day, you're closing your trade. If you're a swing trader, at the end of 3 days to a week, you're closing your trade. If you are a position trader, you're keeping your trade for months. So you have to define your trading style, and that's going to help you stay profitable. Subjectively, myself, I'm in between day trader and swing trader. So once I understood the style I want to focus on, right, I don't look for setups that I need to be in and out of the market within minutes. That's why I don't trade. I don't analyze the lower time frame, like the 5 minutes, 10 minutes, and all of that. And number three will be, you have to set your entries and exits levels. Like, you want to know, what are my rules, what are my entry rules, and what are my exit rules? Like, why am I in this trade? What do I need to see before I close this trade? What do I need to see before I enter this trade? What do I need to see before I know this is done, right? So if you're a price action trader and you see the bullish engulfing, and you're in this trade because you saw the bullish engulfing, and price begins to retrace below the bullish engulfing, you should be exiting the trade, right? So it depends on what particular confluence you're looking out. Most people see the convergence, divergence. They know that, oh, because they see this, they want to leave the trade, or they have to leave the trade. So you need to know, set your mechanical entry and exit rules, that when you see this in the market, you're out of the market. I like to use the Quasimodo strategy. So when I see a bullish Quasimodo, I'm in my lower time frame, haven't done my top-down analysis, and the trade is saying I should buy. If I see a bullish Quasimodo, I'm going to buy. And once I'm in profit and I start to see patterns form giving me some bearish Quasimodo at the tip of the left or right soldier, I'm just going to leave the market, right? So you need to understand this. And then number four is risk management strategy. What is your risk management strategy? You have to never risk more than 1 to 2% of your account. It should be mechanical, it should be robotic, it should be like a zombie command. When you know that price is going below 2% of your capital, you're exiting that trade, right? So you should have that mechanical strategy telling you that you're never risking more than 1 to 2% of your account. And when it comes to your risk to reward ratio, it's either 1 to 2 risk to reward ratio or 1 to 3 risk to reward ratio. So technically, if 1 to 2% of your account is $1,000, right? If 1 to 2% of your account is $1,000, you know that you are never going to risk more than $1,000 in a particular trade, right? And then your risk to reward ratio is, oh, you're risking this $1,000 with the hopes and intention to make $2,000 or $3,000. You're not just going up and risking $1,000 and leaving the trade because you made $100 or you're fearful or this. No, you have to have a solid mechanical strategy. You need to have a trading journal. It helps you know that, oh, this trade, I'm not supposed to be taking this trade because I don't really do well taking this particular pair at this session this time. It just gives you a record of every trade, right? The entry, the exit, where you need to. Helps you manage and review your trades, and by so doing is going to make you stay profitable in the game, right? And then the last on my list is commit to discipline. You need to follow your strict rules, and by so doing, you need to avoid emotional trading, over trading, revenge trading after a loss. Once you commit to discipline, you understand that yes, you take a trade, you analyze the trade, is either going to your take profit or is going to your stop loss. Once it gets to your take profits, you close the trade. You don't need to be greedy, expecting that you want to make more money. Possibly you're risking $5,000 to make maybe $10,000 or $15,000, and then the price gets to $10,000 and you're expecting it to get to $20,000. You might end up losing everything, right? So you need to commit to discipline. You need to understand that, look, this is what I have set myself to do, and this is what I'm going to do. I am not going to do anything other than what I have said I'm going to do. You need to commit to discipline, right? You take a trade and you're about to, let's say you take another trade and you want to risk $1,000, and your stop loss is placed at $1,000 loss, right? And then you see minus $800 and you're fearful and you're like, oh, you know what? I'm just going to close this trade because it's going to hit my stop loss anyways. I have had situations where I take a trade and 2 pips to my stop loss, the trade reverse, right? And you need to understand that the stop loss has to be where the stop loss has to be, right? You're not putting sloppy stop loss just because you don't want to give, you're fearful, you don't want to risk too much, and you need to give price, you need to give market space to breathe, right? There's no such thing as tight stop loss. There's no such thing as unrealistic take profits. You need to put your stop loss where it has to be. That is to say, the stop loss has to be at the right space, at the right spot. And then if price gets to your stop loss, that's it. You're done. No revenge trading. Price is not going to hit your stop loss and you're like, oh, you know what, I'm going to re-enter this trade again, when it's not giving you every required setup to get into the trade. Right, price hits your stop loss, you stay off the market, you rinse the process and you repeat some other time, right? If you get your take profit, you take profit. And even if you move, even if price is in profit and you move your stop loss into profit or into entry and price hits your break even, you let it be. No over trading, no revenge trading. You have to commit to discipline. So these are the important key factors that I have in my trading plan, and it has helped me scale up a lot of accounts. Having this mechanical trading plan, it helps you commit to discipline, it helps you manage your risks better. And I have showed a lot of my students in the Bread FC community where they have been able to scale up series of $100 to thousands of dollars, and series of thousands of dollars to hundreds of thousands of dollars. So you could be profitable just simply by following this mechanical trading plan. And if you want to learn more about how to set up your trading plan and have a mechanical trading plan, just click the link in the bar below, and also remember to click like and subscribe. Until I see you next time, do have an amazing day. Stay blessed.